Markets rallying this week after Fed Chair Powell signaled rate cuts are on the horizon in 2024. That planned pullback, it comes at a key time for President Biden as he gears up for the 2024 presidential election. With us now to discuss all things Bidenomics, Rick Newman. Hey, Rick.
Hey, guys. President Biden needs a break, and he might be getting it from the Federal Reserve. Every president would love a little bit of help from the Federal Reserve. If you remember back to Donald Trump, he was always hectoring the Federal Reserve to loosen up and cut rates. Richard Nixon famously pressured the Federal Reserve to loosen up in 1972, which contributed to inflation later that decade. Biden has been silent on the Federal Reserve, but he looks like he's going to get some help from the Federal Reserve anyway. So what we saw this week, investors have been waiting for this for months. The Fed signaling finally, yeah, we think the fight against inflation is over. The so-called dot plot suggesting that instead of any more interest rate hikes, there could be rate cuts in 2024. And this is kind of just what Biden needs, because a little bit of loosening would goose the economy just a little bit and keep things looking pretty good for consumers. Of course, he needs inflation to come down further. But if the Fed is saying we're done hiking interest rates, they're basically saying we think inflation is going to fall back into the normal range within 6 or 9 or 12 months. So good timing for Biden. This doesn't mean this is exactly the way it's going to work out. We could still end up with a recession. But for now, the prevailing narrative, obviously, is that a soft landing is in.
Yeah, Rick, let's talk a little bit more about those risks as you look ahead to 2024, because yes, this is a win or could be a win here for President Biden, but there's a long list of uncertainties that are ahead. And when you take a look at the polls, he's trailing former President Trump by a wider margin here, at least in some of the results that we got out earlier this week.
Yeah, I mean, the number one thing that could go wrong is that the economy could soften too much and we could end up in a recession, which would be characterized by rising unemployment. I mean, the unemployment rate is below 4%. And if it stays below 4%, that's about as much as Biden could hope for, as long as inflation continues to go down. But what if it goes up to 4.5 or 5%? And people who have been unnerved about rising prices, they have not been worried about job security very much, but it could flip. And, I keep thinking back to a year ago. The prevailing narrative a year ago was we're going to have a recession within 12 months. I mean, the Bloomberg forecasting model said there was a 100% chance of recession in 12 months. So that was obviously wrong, which suggests that now that everybody's saying, oh, we're going to have a soft landing in 2024, well, maybe that could be wrong too. But I think things right now are going Biden's way. And, one other thing to look at is gasoline prices, which, as we know, are the unofficial barometer of the national mood. They're down now to almost $3 a gallon. And Inez Ferre for Yahoo Finance has been reporting that they could go below $3 on average within a few weeks. So if these trends stay, this is about the best news Biden could have. He's got other issues. His age, number one, people don't trust him that much on the economy. But in terms of the stars aligning on the economy, it looks for now as if they are.